An indicator that predicts the exact future is what we're going to be testing today, created by Switch Stats. I'll backtest it 100 times using Bitcoin on the 1 minute time frame to see if it actually works in 2023. Before we start, welcome to TradeFluence. On this channel, we aim to validate as many strategies as possible for you guys to use. First, we're going to need to get our free indicators. So go over to the indicators tab and type in the Echo Forecast by Luxalgo. Then for the second indicator we're going to need is the SSL hybrids. And for the final indicator, we're going to need the volatility oscillator. Okay, so now we have all three indicators on the chart. We just need to go and change some of the settings. So go to SSL hybrids, double click. For the baseline type, we're going to change it from HMA to McGinley. And we're going to change the baseline length to 200. And we're going to leave the rest of the settings the same. Now we need to go to style. And in the style, we're going to uncheck everything but the MA baseline and the bar color. Okay, so essentially what this does, it'll print blue candles when you're in a buy. And it'll also print these red candles when you're in a sell. And for the volatility oscillator, when it's above the zero you have enough volume, and when you're below the zero level you have insufficient volume. And this is our Echo forecasts, which will be our entry signal. Now let's go over our entry criteria. When looking for longs, these three things need to be met. First, the price candles must be blue, signifying the trend direction is in buys. Secondly, it must touch the top of the reference window. As you can see, this orange box, and the candle closes perfectly at the top. And then for our final confirmation, we need to make sure that the volatility oscillator is above the zero level. Once all three conditions have been met, you can take an instant execution with your stop loss below the most recent swing low. But wait, I left out one key important part to the end. The Echo forecast must not predict that price will go below your stop loss before continuing up. As you can see in this scenario, the Echo forecast has trended sideways before continuing the push up. So this would be a valid trade since the prediction didn't come back down to our stop loss. And for our targets, we'll be targeting a 1.5 risk to reward. Okay, so when looking for shorts, the three things need to be met again. We need to make sure first we're printing red candles, indicating we're in a sell structural market. Secondly, we're at the bottom of the Echo display, which is the orange box. As you can see, prices just closed at the bottom of the display. Then we need to make sure that we're above the zero level, indicating that there's enough volume in the market for taking your shorts. And then we can take the short only if the Echo forecast is indicating that price will continue down, as well as not going to come back, take out the most recent swing high this time. So once all four confirmations have been met, we can go ahead and take the trades with a 1.5 risk to reward and your stop loss just above the swing high. Okay, so in this scenario we won again. I'm going to go and back test this 100 times and come back to you with the results. So the results are in. We took 100 trades in 9 days, with 53 of them being wins and 47 lost, with a 53% win rate, and we also had a 32.5% profit, which is actually incredible in considering it's 9 days. And you can see our equity curve struggled in the beginning, but overall it gradually carried on climbing up and up. So would I recommend this strategy? Absolutely. It does need some tweaks and maybe some adjustments in the actual targeting. I would maybe target higher, but overall this is a very good strategy and I do recommend to trade it. So thank you guys for watching this video. Until next time.